When you open any crypto Twitter or X feed in 2026, you will see hundreds of people drawing lines on Bitcoin charts. Triangles, wedges, Fibonacci levels, indicators staked on top of indicators. And here's the secret nobody wants to admit. Most of those lines are noise. They are drawn after the fact to fit a story. Real technical analysis isn't about predicting the future. It's about understanding context. Where are we in the trend? Where are the levels that actually matter? Is volume confirming the move or fading it? In this video, I'm going to give you the foundation. Not 50 indicators, just a small handful of chart reading skills that actually help you understand what's happening on a Bitcoin chart. By the end, you will have a basic, honest view to the market that alone puts you ahead of 90% of beginners. First, the tool, TradingView. It's free, it's used by professionals, it's the standard. Go to tradingview.com, make a free account. In the top of search bar, type BTC USDT and pick the chart of a major exchange, Binance, Coinbase, or Bitstamp. Any of these are fine. Now, default settings. Change the chart type to candlesticks if it's not already. The icon is at the top next to your time frame selector. Pick the daily time frame. That means each candle represents 1 day of price action. Don't add any indicators yet. The chart should be clean, just price. That's how we learn. Each candle has 4 prices of information. The open price, the close price, the highest price reached during that period, and the lowest price reached. The body, the thick part of the candle, shows the range between the open and the close. The wicks, the thin lines above and below, show how far the price went during that period before coming back. If the candle is green, the close was higher than the open. The period closed up. If it's red, the close was lower than the open. The period closed down. Here's the part most beginners miss. The wick tells you more than the body. A long lower wick means buyer stepped in to push the price back up. That's a strength. A long upper wick means sellers pushed it back down. That's weakness. The size of the wick relative to the body gives you the story of the fight. And the close matters more than anything else. A daily candle that closes above a key level is meaningful. A wick that briefly touched the level and got rejected is not the same thing. Wait for closes. Different time frames tell you different stories, and the mistake almost every beginner makes is using the wrong one for what they are trying to figure out. Here's the rough mapping. The weekly chart, each candle is 1 wick. Tells you about the long-term cycle. Are we in a bull market or a bear market? What's the multi-year structure? If you are holding Bitcoin for years, this is your time frame. The daily chart, each candle is 1 day. Tells you about the medium-term trend. Where are we in the current bull or bear leg? Is the trend strong, weakening, or about to reverse? This is the time frame for most position traders. The 4-hour and 1-hour charts are for active traders. They are useful for timing entries and exits, but they are noisy. If you find yourself making big decisions on a 15-minute chart, you are probably overtrading. My recommendation for beginners: start with the weekly and daily. Get comfortable. Do not move to lower time frames until you can read these two correctly. Support and resistance, the most useful concept in technical analysis and the most abused. Support is a price level where buyers have shown up before and stopped a fall. Resistance is a price level where sellers have shown up before and stepped a rise. Real support and resistance level have 3 characteristics. 1, they've been touched multiple times. A level that's only been hit once is just a number. 2, they are horizontal. The cleanest, most reliable levels are flat lines. Diagonal trend lines are useful, but much more subjective. 3, they line up with round numbers and previous structure. 60,000, 70,000, the previous all-time high. These are levels that thousands of traders are watching simultaneously. Here's a rule that took me years to internalize. Do not try to find 10 levels. Find 2 or 3 really good ones. The price will spend most of its time bouncing between them, and that's all you need to know. When a key resistance breaks and the candle closes above it on the relevant time frame, that level often flips to support. Same for the other direction. That flip is one of the more reliable signals in crypto. The trend, the single most important concept in all of trading and the one beginners argue with the most. An uptrend is a sequence of higher highs and higher lows. The price makes a high, pulls back to a low, then makes a new higher high, then pulls back to a higher low. As long as that pattern holds, you are in an uptrend. A downtrend is the opposite. Lower highs, lower lows. Sideways action, a range, is when the price is just bouncing between roughly the same high and the same low without making new ones in either direction. The honest thing to do is identify the trend on the time frame you care about and then respect it. If Bitcoin is in a daily uptrend, the easy trades are longs on pullbacks to support, not shorts at every minor pullback. If it's in a downtrend, fading rallies is far more reliable than buying every dip. Beginners do the opposite. They convince themselves the trend is reversing every time there's a small pullback. They are constantly fighting the current direction. That's how accounts get destroyed. Wait for the trend structure to actually break before you change your bias. A single red candle doesn't end a bull market. Volume is the most underused tool in retail technical analysis. Volume bars sit at the bottom of every chart. Each one shows how much was traded during that candle. Big volume means lots of conviction. Low volume means the move could be noise. Two rules. 1. Moves with high volume are more believable than moves with low volume. If Bitcoin breaks above resistance on huge volume, that breakout is real. If it breaks above on low volume, be skeptical. 2. Divergences are warnings. If price is making new highs but volume is shrinking, that's a sign the move is running out of fuel. The same is true for sell-offs that lose volume. They often reverse. 3 mistakes that I see beginners make almost universally. Mistake 1. Adding too many indicators. RSI, MACD, Bollinger Bands, Stochastic, Moving Averages, Staked 5 dip. The chart becomes unreadable and the indicators contradict each other. Strip everything away. Start with just price, support, resistance, and volume. Add one indicator only when you understand exactly what it does and why you need it. Mistake 2. Confirmation bias. You decide what you want the price to do and then you find the chart pattern that supports it. The fix is brutal. Write down your view before you draw any lines. Then draw the lines honestly. If your lines tell a different story than your gut, listen to the lines. Mistake 3. Trading the lower time frame. Beginners zoom into the 5-minute chart and try to scalp. The 5-minute chart is noise. Real money in crypto is made on the higher time frames, daily and weekly. Stay there. Let's put it all together. I'm going to walk through reading the current Bitcoin chart exactly the way I do it for myself. First, the time frame. I'm starting on the weekly. I want the long-term context before I zoom in. Second, the trend. Higher highs, higher lows, or opposite. I look at the major peaks and valleys over the last 12 months. Then I write down my conclusion in one sentence. Third, the levels. I draw maybe 2 or 3 horizontal lines at the most obvious places. Previous highs, previous major lows, round numbers where price reacted clearly. I'm not drawing diagonal lines yet. I want flat, obvious levels. Fourth, the recent candles. What did the last few weekly candles look like? Are the bodies large, suggesting conviction, or small, suggesting indecision? Are the wicks on the side, suggesting rejection? Fifth, volume. Is the recent move backed by strong volume or is it fading? Now I drop to the daily for the same exercise. Same trend, question, same levels, and I check, does the daily picture agree with the weekly? When they agree, your conviction goes up. When they disagree, the safe move is to wait. That's a full rate. 5 steps 10 minutes, no indicators, no fancy patterns, just price and structure. That's the foundation of reading a Bitcoin chart. Candles, time frames, support and resistance, trend, volume. Get good at this and you're miles ahead of average retail traders. From here, the channel is going to start digging into actual market analysis on a weekly basis. We will do real chart reads, talk about the current cycle, look at altcoins and break down what's happening in the broader crypto market. If you want to keep learning, subscribe and stick around. And let me know in the comments what you want to cover next. On-chain analytics, a specific coin, trading psychology. I'm taking requests. See you in the next one.